News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moskow.
Karen, the global market sell-off continues as investors continue to digest the impact of President Trump's sweeping tariffs around the world and their effects on the U.S. economy. Concern is building that the duties will hammer America's growth, but the president now says he is open to bringing the tariff rates down.
It depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. For instance, with TikTok as an example, we have a situation with TikTok where China will probably say, we'll approve a deal, but will you do something on the tariff?
President Trump spoke aboard Air Force One last night, a day after reviewing a TikTok takeover offer from Oracle, Blackstone, and Andreessen Horowitz. The Chinese-owned video app has until tomorrow to find a buyer or face a ban in the U.S.
Well, Nathan, despite yesterday's deep sell-off extending into this morning, President Trump is predicting the market will boom once the tariffs kick in. Vice President J.D. Vance is echoing that in an interview with Newsmax.
I frankly thought in some ways it could be worse in the markets because this is a big transition. You saw the president said earlier today, it's like a patient who was very sick. We did the operation, and now it's time to make the patient better. And that's exactly what we're doing.
Vice President J.D. Vance told Newsmax last night that the stock market will boom for a long time because we're reinvesting in America.
Well, Karen, we continue to see the fallout from Trump's tariffs in Europe. Let's go to London, get the very latest with Bloomberg's Ewan Potts. Good morning, Ewan.
Nathan and Karen, no sign of the promised stock market boom in Europe today. The Stoxx 600 sliding as much as 2%, reaching its lowest since January 15th. While markets react to the tariff bazooka, Europe's political leaders are weighing their response. President Macron of France saying there must be collective solidarity, urging European businesses to reduce investments in the United States. The EU's biggest economy, Germany, also pushing for a more robust response to the US president's threats. In London, I'm Ewan Potts, Bloomberg Radio.
All right, Ewan, thank you. Well, let's turn back to the markets here in the U.S., where futures again are falling following yesterday's massive sell-off on Wall Street. The Nasdaq plunged 6%. The S&P 500 dropped 4.8%, while the Dow fell almost 1,700 points, or 4%. So what should an investor do? We have a couple of calls this morning, and we bring in Bloomberg's John Tucker with the latest. John, good morning.
And good morning, Karen. Let's start with what investors are afraid is going to happen. Bob Michael is with J.P. Morgan Investment.
How tariffs stand as they were announced, that's going to push the U.S. economy into recession.
The market was caught off guard by the severity of the tariffs. They're even bigger than the Smoot-Hawley tariffs at the beginning of the Great Depression. Jane Foley is with Rabobank.
These are at the top end, really, of many market forecasts that we had.
Seema Shah at Principal Global Investors sees the threat of higher inflation and slower growth, the dreaded stagflation.
And we know from looking at previous market movements over history that stagflation is typically the regime where rarely does any asset class do particularly well.
UBS downgraded U.S. stocks, warning of prolonged market volatility. Legendary investor Bill Gross warns potential dip buyers, this is an epic economic and market event, and don't catch a falling knife. So what stocks do well in such an environment? Tobacco and household products. As Bloomberg columnist John Authers points out, people will always smoke and go to the bathroom. In New York, I'm John Tucker, Bloomberg Radio.
Yes, indeed. Thank you, John. While all investors took a big hit to their portfolios, some of the rich and famous were particularly hard hit. Bloomberg's Lisa Mateo joins us with that angle on the sell-off. Good morning, Lisa.
Good morning there, Nathan. Yeah, the world's 500 richest people saw their combined wealth plunge by $208 billion yesterday. Now, if that sounds like a big number, well, it's because it is. It's the fourth largest one-day decline in the Bloomberg Billionaires Index's 13-year history. It's also the largest since the height of the pandemic. Billionaires in the U.S., they were affected the most. Meta's Mark Zuckerberg at the top. The company's 9% slide, well, it cost him $17.9 billion. Amazon's 9% plunge, well, that cost Jeff Bezos $15.9 billion in personal wealth. And Tesla's Elon Musk, he lost $11 billion. The only region where the rich saw net gains on the index was the Middle East. Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you. Well, the Trump tariff continues to impact global markets. Joe Livornia, chief economist at SMBC Nikko Securities and a former Trump economic advisor, says let's see how things play out long term.
We could disagree on the approach and the implementation. We could debate that. But ultimately, where is the economy next spring and summer? If it's turning up, and turning up powerfully, and it looks like the administration and its trading partners are moving back to the center, then maybe all this is just a lot of noise and things have settled down and we have some minimal level of tariffs. There's some protectionism, but generally speaking, cooler heads prevailed and things worked out.
SMBC Nikko Securities' Joe Livornia says Trump's tariff announcement was more aggressive than he anticipated, but he has not yet changed his outlook for U.S. growth in 2025. And that's news when you want it with Bloomberg News Now. I'm Karen Moskow.
I'm Nathan Hager, and this is Bloomberg.